Thanks for clicking. The Bank of Canada, armed with high GDP numbers and high inflation, surprised almost no one this morning when they raised interest rates by 25 basis points.
Crazy son of a bitch, you did it!
While some had argued for a 50 basis point rate hike, or 0.5%, the Bank of Canada took a more tepid approach, slowly increasing rates by 25 basis points as more and more economic concern grows over the Russian invasion of Ukraine. So what I want to do today is go over the bank's decision to raise interest rates. Then we'll look over some predictions over how high interest rates will go over the next 12 months. And then I want to go over a recently released study which looks at the effect of the last time we had rising interest rates and what effects that had on home prices in Canada. We'll then discuss what to look for next, as it's definitely an uncertain time. Bank of Canada Governor Tiff Macklem is set to speak tomorrow, March 3rd, where he will no doubt be discussing the Bank of Canada's rate path for the foreseeable future. We'll also have more information on Canada's real estate data as it comes out for the month of February, and obviously we'll have the inflation data out midway through the month. Click like and subscribe if you want to get those updates, but for now, let's get into this rate hike. As mentioned, the Bank of Canada raised rates by 25 basis points this morning, or 0.25%. So anyone with a variable rate mortgage or anyone looking for a new fixed rate mortgage is set to see higher borrowing costs for the foreseeable future.
Yeah, I'm surprised. I'm not surprised.
But how high will rates go and how will this affect Canada's real estate market? How high interest rates will go is anyone's guess. In a survey of 24 economists, the Financial Post found that nearly half expected rates to be 1% higher than they are now. TD sees rates going up to 1.75% over the next 12 months, or 1.25% higher than they are right now. And Scotia sees rates going up to 2% by the end of the year. Right now, we're at 0.5%, so Scotia sees at least 6 more rate hikes. But what will these rate hikes do to house prices? A recent, widely cited study by Zoocasa looked at what happened to house prices the last time the Bank of Canada engaged in multiple rounds of interest rate hikes. The study looked at 2017 and 2018, which was the last time the Bank of Canada raised rates by more than 1% throughout the 2010s. Though the study found that house prices did go down during that period, it came to the conclusion that the reduction in house prices were due more to the introduction of the stress test than they were due to interest rate hikes during that period. So according to the study, although rates went up to 1.75% by the end of 2018, we didn't see any real causal effect where interest rates caused housing prices to go down. With that said, 1, nobody really knows what's going to happen with interest rates, and 2, this is definitely not 2017 or 2018. 2017 and 2018 were a very different time, as Canadians did not hold as much public or private debt as they do now. And if we look at this chart, we see that we also did not have the massive unprecedented upsurge in prices that we've seen over the past 2 years since the beginning of the pandemic. Further, we don't really yet know what the effects are going to be from the tragedy currently unfolding in Ukraine. While most economists, most commentators are saying that oil prices are going to go up and we're likely to see price hikes, we don't really know as of yet how bad this situation is going to get, how high oil is going to go, and what is going to happen to the rest of commodities. I would say that most economists, most onlookers are thinking that prices are going to go up, and I would agree. As oil goes up, as everything goes up, we're likely to see that inflation rate go even higher than it already is, and right now it's at a 3-decade high, and this was without a war to boot. And this situation should sound familiar, as it's to a certain extent very similar to the 1970s when we saw the oil price shocks. We had an external event impact the price of oil, which caused their inflation rate to go sky high, well over 10% just in 1974 alone, which was followed by record interest rate increases. Whether or not we'll see the central banks, the Bank of Canada, increase interest rates to combat the impending inflation is anyone's guess.
Nobody knows.
On the one hand, the population will not stand for 10-15% inflation. On the other hand, as much as this is not 2017-2018, this is also not the 1970s. We have nowhere near the amount of consumer debt or public debt that we had in the 1970s as we have now. And the consequences to raising rates because of our debt load was borne out in a recent poll. Studies found that 49% of respondents between the ages of 18 to 34 said that rate hikes would move them closer to bankruptcy, with 41% of the respondents between the ages of 35 and 54 also saying that rate hikes could move them closer to bankruptcy. So while we might be heading into a period similar to the 1970s, and again, nobody knows. No one knows how this Ukraine crisis is going to unfold. It's just too early to tell. But if this does keep on going, it looks as though prices are going to be going up due to an external, uncontrollable element. If that's what we're looking at, if we see prices go up like they did in the 1970s, it's unclear as to whether or not policymakers have the same tools available to them, as it's not clear that the economy would be able to take such massive rate hikes that we saw in the 1970s. With all of that said, with all of the comparisons to the 1970s, with this war upon us, and with these interest rates impending, nobody knows what's going to happen. Two years and a few months ago, nobody knew that COVID was a thing. 4 or 5 months ago, nobody saw Omicron coming. 2 months ago, very few predicted this Russian invasion of Ukraine. So, if we've learned anything over the last few years, the world is uncertain, the central banks are definitely unpredictable, and the world is unpredictable. So no one really knows for sure what is going to happen over the next year. Obviously, we'll have updates on this channel as to what happens over the next year, and we do expect to cover Tiff Macklem's speech tomorrow, as he will no doubt have something to say about the Ukrainian crisis and our path going forward vis-a-vis interest rates, and maybe something about Canadian real estate. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.